what is the definition of tax nexus? Tax nexus is the connection between the business and the state, and then the obligation for that business. If that state requires that to have nexus in there, you may have nexus in that state. I've seen a big issue we've had where sometimes an employee will move and HR and payroll doesn't move them. So for the R&D credit, most of the industries I've seen, a lot of times professional services don't think that they qualify for R&D credit. For startup businesses and for small businesses, they allow you to take that credit.
Tim Fargo, he is one of our client CFOs here at Rose and tax partner. Tim is a CPA with over 30 years in experience supporting government contractors as well as nonprofits.
We're going to bring Tim on here to talk about taxes and compliance.
Perfect. Great. Thank you, Ted. I want to talk today a little bit about not just taxes and compliance, but nexus and sales and use tax. As most of us are aware, there's been a change in the focus from remote work to return to the office to different policies related to their employees and also even where their contracting officers may be. So it's important to really look at the state tax nexus when we're talking about changing our policies from where our employees are working or even where we're performing the work. And so we're going to talk a little bit today about the compliance of both the nexus tax, the unemployment tax, sales and use tax, and then some of the risks for taking those. So first, what is the definition of tax nexus? So tax nexus is the connection between the business and the state, and then the obligation for that business to either file information or pay some tax to that state. So there's a few different types of nexus, and as we start to shift where our employees are working for the states, we need to really look at a few of these pieces. One is, where's our physical presence? Where did we have our employees? Where did we have our offices? Where did we store our product? And then where are we moving that towards? Are we moving our employees from a full remote situation to an in-office situation? Are we moving our product to a new location that allows us to sell it at a different way or a different logistical facility? Those things will adjust between the states because each state has a different level of reporting. So we have to make sure, and we'll talk about that, make sure we understand the nexus reporting for each state. The other one is economic nexus. Where are we selling? We may shift from a contracting, if we're a government contractor, you still may have to file in the state, but have exempt sales for government contract or resale. But you still may have to file in a state. If you move from one state to another, you may have a new state filing requirement within there. So we need to look at where our sales are, and then each state some have performance-based markers, some have market-based markers. So you have to look at, is the state you're going into a performance state or a market-based, meaning where the sales are generated. Finally, it's a click-through. If you have online or if you have online states or affiliated nexus, there are some rules for nexus as well. So it's important to really understand the nexus that you have and the basis.
So Tim, what trends are you seeing in the hybrid work arrangements that are complicating tax compliance?
So the trends are, first, after COVID and in 2021 through 2023, most states created some sort of remote work nexus, meaning if you have employees in those states, you then have a nexus in that state if they have state income tax or compliance. The trends I'm seeing are companies are changing their policies to remove that remote work and say you're now working out of the office and you have to go into the office. So you're switching both the unemployment from that employee, because if you're moving that employee from their home unemployment to a office employment, but also the sales related to that employee, what they're working on, would shift between states too. So that's a big piece for the states, because each state is going to analyze where that employee was working. And that is a challenge between hybrid as well, because you have to really identify on the hybrid situation, it's the majority of where that employee works. In most cases, the hybrid is the work location, but it's a big piece we've seen. And there's also been a trend back to as employees travel, then most states have that standard business travel impact. So you may be working from one state for a week or 2 weeks. If that state requires that to have nexus in there, you may have nexus in that state.
So on the next slide, we have sales and use tax considerations. What part of sales tax compliance presents the greatest risk?
Well, the greatest with the sales tax compliance is where did the sale happen? So that's the risk that you have to really justify and show. A lot of times with delivery of, and a number of states now have personal services require sales tax depending on the type of service. Other ones, they're products or they're transferring products between companies. For instance, we had an example of a company who is assembling their products here in one state. They're delivering it to another state to sell it. So the question is, where do they pay that sales tax? So we have to identify where do you have that distribution model and where do you have the sales tax. You don't want to duplicate pay sales tax, and you have to really justify where that sale happened. So that's a big risk, and especially if we're moving things into the US, are you assembling it in one location? Do you pay the sales tax when you buy the raw materials, or do you pay the sales tax when you actually sell it to the entity?
On the next slide, we have best practices for Nexus. There's so many changes going on. I mean, what's your recommended cadence for reviewing state Nexus rules?
So I normally recommend you review it on a quarterly basis just to make sure that we understand where the employees are. If you're moving employees dramatically on a monthly basis, get to that level. Smaller companies that don't move a lot, it's annual. But right now with what's happening, I'd review it every quarter to say, okay, here's where we are. Here's the arrangements we have for the employees, what the states they're in. It is under human resources and make sure payroll aligns to where they are. I've seen a big issue we've had where sometimes an employee will move and HR and payroll doesn't move them. So it still shows their withholding in one state and their unemployment in another. And when you go to do your nexus and your tax filings, you're now misaligned and it causes a lot of issues and a lot of cleanup.
On the next slide, we have the best practices for sales and use compliance. And what processes ensure accurate tax rates across different states with all the changes that are occurring now?
Well, we want to make sure first we have documentation for each of the states we're registered in. We have our both registration numbers, employment numbers. If we're a nonprofit or if we're even a government entity, if we have exemptions that we need to apply for, we need to make sure we have those documented. And then we want to make sure that as we're invoicing, we have the right sales and use tax. I've seen a lot of times the systems are set up for incorrect states or incorrect sales tax because the states have been changing their sales tax rates. So it's important to make sure all of your systems are aligned. And then for use tax, make sure you're getting charged use tax when you need to pay that use tax and you're filing that and submitting that to the states.
On the next slide, so how do we determine eligibility for R&D tax credits?
So there's a few different pieces when we're looking at R&D tax credit. So it's really what the R&D tax credit is. It's an incentive both from the federal government and from the states for qualified research activities. And we can talk, well, I'll show you in the next slide what that is, but it's what that does is it provides you both a tax deduction and a tax credit for that research and development. What they've said for the federal government and then even for many of the states is you have to qualify in a 4-part process. This is you really must have developed or developing a product, a process, a formula, or a software within your company. You need to eliminate the uncertainty. You need to really identify what that design, the capability is of that process or product or software. You need to evaluate the different models and the prototypes, so it needs to be part of that process. And then it needs to be some sort of engineering or process improvement, both through computer sciences, physical sciences, even through a process improvement. So there needs to be those 4. You need to justify all 4 of those to qualify just to have our research and development for the tax credit. On the next slide, it's really what do you need to do to track this? So first thing is you really need to have systems in place to track it. You need to make sure you have a time system for the labor. You need to track a special R&D projects for each of the projects you're working on. It's important to ensure that the specific processes that are being improved have specific projects for each, and then you assign the costs associated with those. And that includes salaries, contractors, supplies, any for IT, cloud computing, for process improvement, the actual logistical process. And then it's important to look through the different states. Most of the states have a form of a R&D credit. Some link them to the federal credit as a small portion. It's important to understand within each state what you're processing for those. And they do have a special incentive for startups. So if this is a multi-year process. So for startup businesses and for small businesses, they allow you to take that credit and apply against your Social Security, your FICA tax, your payroll taxes years. And a portion of that credit can offset your payroll taxes. So that would really save on your cash flow. You just have to qualify, and there's certain pieces of revenue to show that you are a startup business. And then it's really important to have someone analyze and work with you to set up this process, because there are pieces that you can't include, like administrative costs and management costs. So you have to make sure that you're really setting this up properly so that you do qualify for the credit.
And really, the foundation for that is a strong project costing solution within your accounting program.
That's correct. Yeah, a strong project costing solution and ensuring you've educated your employees on what it entails for each of those projects.
Right. What industries are you seeing that are missing out on the R&D credits the most?
So for the R&D credit, most of the industries I've seen, a lot of times professional services don't think that they qualify for R&D credit. But if you're improving your overall process, you're improving your systems, and you can justify that improvement, you can qualify for the credit. A lot of times manufacturing, they may rework a process and just put that as part of their manufacturing process versus changing the overall R&D.
Yeah, also on the M&A side, what are the pitfalls that you're seeing on the state compliance with M&A transactions? That seems to be a hot area for M&A deals.
The biggest thing I see with M&A deals are a lot of times you're not in compliance. You haven't kept your registration up. If you haven't been in a state, if you registered for a state a few years ago and you had a sale and you didn't keep that state active, now you have an inactive state, and it's multiple years of filings that have to happen. In addition, as we talked about earlier, you may not have your employees listed properly in the right unemployment states or in the right with payroll states, and so when they're doing the analysis, they find those misalignments. And then, of course, income tax filings. You have to make sure you align your income tax filings with both where you have your sales and your property.